I went to sleep last night and crypto looked okay. I was actually pretty bullish. But I woke up yet again, 2 days in a row, and America has sold their bags. Absolutely dumped on my head. And I'm sick of it. So today's video, guys, is an update on the crypto market. A realistic perspective, not up only hopium BS, but actual real fact-based, analysis-based takes on where I think the crypto market is and what I think could happen in the future. So if you enjoy this, drop a sub, drop a like, and enjoy this video. GM, everyone. Well, what a horrible morning to wake up to yet again here in Australia. America is dumped on us yet again. Classic Americans over the past sort of week or so. Go to sleep at night in Australia and it's market's looking pretty decent, and wake up the next morning and it's red. So look, there's a few things I'm going to talk about. Macro is really going to be the focus because ultimately high time frame charts are showing a lot of weakness and have shown weakness for a while. And now we're starting to lose some pretty key levels even on mid time frame. So this is the 12-hour. I know a few people in GTG are looking for longs here on, say, hourly, 4-hour. We've got a couple of we've got a sweep here potentially on like low time frame. So that is something to keep in mind. But I want to talk about obviously portfolio structure. I want to talk about risk structure, risk management right now, because there is a lot of weakness in the market. And thus, if Bitcoin and Ethereum and Solana and stuff can't hold up, then on-chain, meme coins, NFTs, DeFi, whatever it is, they are going to really suffer. And I mean, if you do have a look, BTC is down only 2%, but ETH and Sol are down like 7%. Other altcoins are down 8, 10, 15, 7%. 2% depending on what it is. So yeah, just be careful, because if we do lose this, probably this is a critical level. If we lose about 98k, then yeah, we are pretty much sending it way back lower in my opinion. So keep an eye on this, but the daily close in a couple hours time will be very important. I agree with Cappy, 89 to 93 would be very much next. We've got this massive FVG here as well. This is the daily. We got a FVG here on the daily. There's also a weekly FVG as well, which might align with this daily FVG. There you go. So yeah, this is probably the area where I start to get pretty interested in BTC going to 90k. So again, is the bull cycle over? No one will know until, unfortunately, the top is in. But there are a few signs that I want to talk about in this live stream to keep it real with you guys. Again, I haven't been trying to FUD anyone on Twitter, in GTG, or in these videos, in these live streams. The purpose always is to stay factual, to stay analyst based, to stay real, rather than just being a bear or just being a bull. Smart people look at all sides of the story to happen. So, I mean, if we get a daily and obviously a weekly close below this 100k level, that's very bearish in my opinion, and we very much go lower. The critical part for me is that the weekly still has a long way to go. We're only at the, well, I mean, if you look at the top one, 44th percentile, but 34th percentile as well, with heavy posturing to the downside, with a pivot about $17,000 away from where current price is. So there's a lot of pressure on the week here to the low side. So if we just take a look again at a couple of things that I've been writing about recently as well, and I've been sharing these in the spot channel as well, and the analysis channel. I'm not going to ping unless it's very time sensitive, but there's just signs of exhaustion, right? And there's signs that, for me, why I have been putting so much preference on sort of being stabled up more recently. And that's why my spot portfolio is pretty much now 98% stabled. My thoughts are I would rather try and swing trade futures, perps with clear stop losses and clear take profits, rather than probably allocating spot, because right now where we are in spot, there's a lot of weakness there and I just don't feel it is a good position for me to be looking to, one, buy, but two, hold sort of positions when we've seen such a tremendous run. And I mean, like, a lot of us have been here, like a lot of the OGs. I can see Jackson here. I can see obviously Sexy and even a lot of other people in the group who have been with us now for multiple years, since 2023. Like, it has been a journey. We have dominated trends for the past 2 and a bit years. So it's no surprise to like feel a little bit like you don't want to be taking on too much risk at this point in time. So I think that's the first thing we want to talk about. But the reason I would rather trade perps is because I have a clear invalidation and a clear take profit for those trades. And as Ozzy just said this morning in the group, you got to take profits on these trades as well is the key. And more recently, move stop loss to break even if you are in profit, because it's just such a choppy, unknown market right now. There's a lot of still bullish catalysts on the horizon with liquidity and whatnot available, but there's also a lot of bearish signals, as you can see here as well. So if we just take a look, the stochastic, when it gets up to the 80th percentile on the monthly chart here, it traditionally indicates that this is a bull market period of time. So this happened in 2016, happened in 2021, and obviously has happened since 2023 to where we are today in November. As you can see, despite us putting actually in a new all-time high late 2021, the stochastic in 2021 was actually a very short period of time. That's why it's also really good to have confluence with other indicators. So the MACD down the bottom on the monthly chart, it often does signal, and I've talked about this a couple of weeks ago as well, when it does cross, so the bearish cross, when the blue line, the slower moving average, sorry, the blue line, which is the faster moving average, moves over the orange line, that indicates that it is technically called a death cross, which is one of the most bearish crosses that you can have. And 100% of the time out of the last 3 iterations, it has resulted in the previous high before it being the all-time high of that cycle. So again, we haven't quite crossed it, but where price is today and where price is looking to close in the next 2 weeks in November, I would argue that it is about to cross, and potentially that 126 high was very much the top of this cycle. Now, does that mean that we can't push back up to 125, 120K in the months to come? No, but it does at least insinuate that based on history, you could argue that that top is very much the top of this cycle, which does align again with halving to all-time high, with the bottom to all-time high, with peak to peak, very similar timing as well. So there's a lot of confluence that I'm seeing around the place. It's just these bullish catalysts around liquidity, the stimmy, which apparently is still just going to be a tax deficit rather than actual money in your pocket, cash grab. So again, all of this sort of stuff. We also have overhead resistance from the last 2 cycles right here. If we do take a look as well, if I just close this, if we have a look, we never actually got, like, diminishing returns are expected, right, in crypto. So we actually got to the 1.618, and this is the other bearish factor for me, is we're now below the 1.618 extension from the high of last cycle to the bottom of this cycle. I mean, let me just make it a little bit closer to be accurate. Yeah, there we go. So we're well below it. Yeah, $3,000 below it as well. So again, another sign of us losing a critical level on a high time frame as well. Whereas historically we did get to about the 3.618. But yeah, diminishing returns over time, maturing assets. Maybe the volatility to the downside won't be anywhere near as bad. Maybe we only come down 25%. I do think that we could, in worst case scenario, come back down to the 50K region from here in a bear market, which I think is probably a great opportunity in the long term for me, at least, to buy some Bitcoin around there rather than trying to dabble in these other assets at this point in time. So the volatility, I think, from now for Bitcoin will be less volatile than what we've seen in previous bear markets. I don't think it'll go down 80%. I think we might go down 50%, maybe 60%, but nowhere near as deep as that. Because you've got to remember, Saylor, he gets liquidated, or his cost base is around 74K. Like, that's not that far from this. That's not far at all. It's a previous all-time high. So yeah, I'll keep an eye on what's happening across the market. Now, why also do I feel really bearish? Okay, we have distribution here. There's a few. I'll start from scratch so you guys can see as well. So this is our chart, right? If you understand any just real simple market structure, okay, anytime you show weakness above a previous all-time high and you have distribution above or a deviation above, that often is, again, a sign of exhaustion and a sign of distribution, thus a change of a trend, and then the bear market, or obviously if it's the opposite, okay, where you have it down here, okay, where we actually had distribution below price action, okay, down here, distribution, then it's the opposite of the trend. So it's just when there's a critical high being taken out as well like this and distribution occurs, it often does lead to the start of a bear market. So if we have a look at current prices, okay, we have yet to ever close a monthly candle above 115. We also did wick the previous all-time high here twice, deviation above there / distribution up there, distribution here, when you look at it from a range as well. If we have a look at obviously the first all-time high that we set earlier this year in January, we are struggling to show strength above that level as well. So there's a lot of things that I'm looking at this point in time that it's just showing us exhaustion on the Bitcoin chart itself. Okay, and I mean, if you look at Ethereum, it actually looks way worse. Like it has a which chart is it? It has a multi-year SFP, so swing failure pattern. We've also lost the critical level now of all of these previous highs, 1, 2, and more recently as well. And it looks set to head back to its mid-range at about 2.9K very shortly. So Yeah, look, I just think that there's a lot of exhaustion out there in the crypto market. We keep it real here in GTG, and I think that's the secret sauce to making sure that we preserve our wealth to the downside, because protecting capital to the downside is arguably more important than taking profit in euphoria or during absolutely massive bull trends. So for me right now, I am curious about what happens with Bitcoin and Ethereum if they do go lower. So Bitcoin for me, it has to hold this 98K level, as we just spoke about earlier. Has to hold that level, okay? Otherwise, yeah, for me, it doesn't look very good at all that we are probably going to lose this range, and we are very much going to head back lower towards lower fibs. So if we do take a look at some of these fibs just to gain a little bit of a target, so from the swing range, fibs, the 618 and 66 is around that 92, 94K region, which there is a little bit of liquidity over here as well. Jax just said in GTG, he said, Buddy has been working as an engineer for the Pentagon, hasn't been paid for 43 days, so over a month, and they still haven't told him when he will be paid. So a lot of liquidity is stuck for the US. Well, the big thing as well is the fact that they aren't releasing October data. That just suggests that it's very bearish as well. So that's something else to keep in mind as well. The fact that data has been lost or whatever it is, like I doubt that. Like you can't lose data. Like it's just statistics. Like I don't get how you can do that. So yeah, there's a few signs out there. I mean, global liquidity, as much as Raul Paul wants to glorify it, let's call it that, glorify that it's going to increase. If you look at the M2 money supply, it hasn't increased at all. There's been a stagnant since obviously the government shutdown, but it's been stagnant for a while as well. So I don't know, just keeping an eye on it. But yeah, targets to downside, probably around that 94, 92. Could see a bit of love there, but obviously 89 remains a big target with that weekly and daily FVG as well. If we zoom out to higher time frames, so if we actually take a look from the low to the top, that could be a potential level to consider where we might come in as well. So the current low to the current top, 83 is around the 382, and 70K remains the 0.5 of this range. So I think those would be reasonable targets if we do get quite bearish. Again, just keeping it real. Everyone always hypothesizes to the upside, but we like to hypothesize to the downside as well. Now, there was another indicator. So Plan C, quite a popular account on Twitter, has received a lot of following. But again, he's very bullish takes. It's up only sort of hopium takes, and his data was a bit skewed. So he actually shared yesterday this indicator here. So basically the 50-day slow moving average across the 200-day, when that does cross this cycle since 2023, it has resulted in Bitcoin actually pumping from there 1, 2, 3 times, and the fourth iteration is about to occur. However, it also indicates the start of a bear market. Okay, so as you have a look here, back in 2018, it happened as soon as that 200-day moving average moved over the 50-day. It insinuated that we went into a multi-year bear market here in 2018. Same thing happened in 2022. It happened at the end of the cycle after high was in, and we went into a multi-year bear cycle as well. So again, be careful. Be so careful on Twitter. Be so careful watching YouTube videos, because people skew analysis, they skew data to fit a narrative, and it's so important that you zoom out and you look at it from a larger time frame, from a more statistical based time frame. Okay, and sure, this has, like, if we have a look, it did do three iterations of it in the bull cycle last cycle, where we saw it pumped and Bitcoin went back above and set a new all-time high. So it does work, but the data suggests that it also insinuates that there's a top if it does happen at the end of the cycle. So again, just stay cautious out there, guys. There's a lot of bullish, up-only hopium takes out there, and it's important to always just remain objective as much as you can. And I get it. Like, I'm sick. I feel shitty. I feel shitty that we are dumping yet again. I feel emotional because I'm like, well, why? Like, there's things that I'm seeing that we should be like seeing at least some breakouts happen, but there's just so much weakness out there. And if it's ingrained into the actual US day-to-day government, then that's, yeah, like it's worse than we probably expect. And I mean, we don't necessarily, like, I know a lot of people like, well, gold's at all-time highs, silver's at all-time highs, the S&P 500 is at all-time highs. But we saw in 2018, we saw the S&P 500 pump whilst crypto didn't. So throughout 2018 here, we saw end of 2017 all the way through to 2019. The S&P 500 pumped. Obviously, we had COVID, two big dips here. But if you have a look there, crypto didn't pump during that time. Crypto dumped, so it isn't as correlated as everyone thinks. We dumped throughout 2018. Where was it? Back here. 2018 was horrific for crypto. Long time bear market here. So yeah, there's no correlation there as much as people are trying to draw that out. The real worry for me is if we do break this. So the total crypto market cap, if we're coming down very aggressively. We are coming down very aggressively. So we're coming into pretty much key levels. The fact that we have lost, that's not price, that is price. And let me take that off. We have lost 23%, which is about $1 trillion in the space of about a month, just over 5 weeks. So again, there's a lot of weakness in the market. You've got to remember, we have been up only. Like I would argue this could be the time that we broke out from this. We went up 300%. Like that's insane, right? And again, like as price increases, as these assets mature, then you're going to get diminished returns. And I think that's an important factor to be aware of. So do I think the bull cycle's over? I still am very 50-50. I'm just cautious. I'm optimistically cautious. I want to see more come out of Trump and blah, blah, blah. The fact that we are worrying so much about that also gives me not anxiety, but it makes me a little bit worried about, okay, why is he protecting it so much, right? So again, keeping an eye on all these sorts of things and what the government's doing, what the US is doing, what the liquidity is going to do, what Japan's going to do, and whatnot, because the dollar's steady as well. It is rejecting from a pretty high time frame key level, but it could easily break out of this sort of bullish wedge that it's been in for a while. And we are bottomed on stochastic on the monthly. So that would suggest that at least we probably see price at least an attempt and move higher. So yeah, there's a lot at stake right now. I understand that. I know people are absolutely smashing it with the scalps, which is fantastic. But the other side of the market, as we've just seen, like meme coins are suffering. If we have a look, like even like this beautiful breakout trade on, say, Kita, it looks so good, but I have no confidence holding this when there's no volume coming in. It's clear that this attempts to break out but fades. It just literally dumps, and I'm not confident holding this. If I'm not confident holding BTC, why would I be confident holding anything else really at this stage? So the one issue I have right now is NFT. So I did sell my 2 Moonbirds this morning. I know I bought one literally yesterday because I went to sleep and the market looked good, ETH looked good, and then it dumped. So yeah, you gotta adjust because protecting downside risk is so important. If you don't have capital to use in the years to come or the months to come, then you're screwed, right? So you want to protect downside risk more importantly than anything. Any trade that you ever take, always think about, well, what's the downside of this trade? Not the upside. What is the downside? So that Moonbird that I bought last night, I was like, well, yeah, the upside would be 4 to 5 ETH if the market holds up here. If we see Bitcoin witness and it just starts to close below 100K and starts to close below 98K, I don't want to hold a Moonbird. The issue I still have is the one asset that I still hold is obviously the Pudgy Penguin. So I don't know what to do there. It's slightly below my entry at 21K. It might be time to get rid of it. I don't know. I'll have a think. Yeah, so it's 18K. So I'm down 3K from my entry. So yeah, I am thinking about that as well. But even wrecked, okay, we had this fake out here. No volume came in. We had another little attempt here, rejection yet again. No volume came in. So the fact that we aren't seeing volume come in and everyone's farming these sort of perp dexes and whatnot for their airdrops, so Lighter and obviously Hyperliquid and a few others as well. And everyone's using these DeFi protocols to pretty much just stable yield and farm those for points, right? Like no one is really on chain right now trading. And I mean, you can go to most chains. Solana hasn't had a daily runner above millions in so long. So again, it shows a lot of weakness across here. Binance Smart Chain was an absolute just very quick cycle, absolute crime season. It died. Base, I mean, I've been looking at Base, but there's a lot of weakness over here. There's not much volume coming in. There's not much sort of market cap runners over there either. The best charts are Kita and those sort of things, virtual as well. But it's just showing a lot of weakness, right? Like it broke out, but we had sell volume come in, and it didn't even get to its 618 from this breakout. So that like even just simple price action of like looking at different tokens on chain on different chains, it's just showing me that there's just not a lot of risk on right now. And I mean, alternative me, which is the crypto fear and greed index, it actually is at extreme fear. And I just want to clarify that, like historically buying extreme fear in a bull market is very good, right? It is. But if we are at the end of a bull market, buying extreme fear is not a good thing. So I think the lesson here is if we have a look, actually the both like previous tops, like 2017 it was top, but we actually hit extreme fear immediately after the top in 2018. We actually hit extreme fear, where is it? Down here. at the end of the cycle again in 2021 and at the end of the beginning of 2022, which was after, again, Bitcoin and altcoins went absolutely crazy. So it's not uncommon to hit extreme fear at or just after the peak of the cycle is put in. Again, another objective take that I'm just looking at based on price history and what we're looking at. So again, I like if this is a huge opportunity if we do see a run up again in the months to come. But for me right now, there's not enough signs, there's not enough analysis that is giving me enough strength to be sort of keen to buy a lot of things right now. So I hope you appreciate that, guys. That's as raw as I can really give it to you. I've got to jump on stream shortly with Craig. So if you have any questions, I can obviously reply as well. I think the big lesson too is the difference between now and say 2021 was everyone was on the computers, everyone got stimmy checks from COVID, and rates were so cheap. So everyone had free cash, okay? Everyone had free cash and everyone had free time because they were just chilling at home. This is like life is way different. Life is so expensive in Western society. It is so expensive. Rent, groceries, healthcare, whatever it is. You look at it, cars, expenses, etc., etc. Life is so much different now. There's no stimmies being handed out just yet. So again, there's a lot at stake here. And yeah, Cappy's just asked, so what am I holding right now? I'm actually holding just a small portion of Bitcoin and my big pudgy, pretty much, yeah. I decided to sell pretty much everything else. I hold 10 Bodogos, but that's just mainly to obviously tap into Easy in the WoW chat in the Bodogo community. If I didn't want that, I wouldn't hold them. But I'm still, I don't know if I want to hold them either. That's the other thing. They just keep going down as well. The thing with NFTs is it's the emotional attachment of NFTs. That's the oopsies. I just accidentally closed the button. It's the attachment of NFTs that the emotional attachment, obviously the PFP of my Pudgy Penguin, I don't mind my entry at 21K. So that's the reason I'm happy to hold that. And that's why entries are so important when you're going for a trade. Like be greedy for an entry. Always be greedy for an entry, okay? Because an entry, a really good entry means you can be so much more flexible on the other side of the trade when you're looking to take profit or when you're looking to de-risk. So the reason I was happy to de-risk my Moonbirds is because my entry wasn't as good, right? The entry I had the other day at 5,500, yep, I was still in profit, so I took profit on that one. But the one I bought overnight, I'm already down $700. I was like, no, okay, there's too much weakness across majors, too much weakness in the market, not enough risk on asset sort of like thriving environment, not enough risk for people to be like, yeah, I'm buying this, even though it has a TGE. So I would much rather see this dump and I buy one again at a very reasonable price. Or I'm happy to see this run and I just fade it because it doesn't fit into my trading thesis or my trading plan, okay? And that's the secret sauce, okay? Is not feeling fear, not feeling FOMO, not feeling like greed, but just trading with what works for you internally, but also what works within your trading plan. So I hope you guys appreciate that insight. I might cut the recording there. So if you have any questions, guys, check out GTG down below if you're watching on YouTube. Drop a like, drop a sub if you appreciate these raw takes, this analysis base. It's not just up only hopium. It's actually backed with facts and analysis. And I've been doing this for 9 years. So hopefully that helps in the long term. But yeah, thanks for watching and I'll obviously see you in the next one.